Welcome back to the deep dive. We love getting into the weeds on these big policy documents, trying to figure out what they really mean.
Absolutely. Sorting the signal from the noise.
And today, we've got a really significant one. Executive Order 14233.
A landmark one, yeah.
Yeah.
Dated March 6, 2025, published not long after in the Federal Register.
Right, relatively fresh. And it does something pretty monumental. It sets up two brand new federal initiatives. We're talking about the Strategic Bitcoin Reserve, the SBR, and the United States Digital Asset Stockpile, or USDAS.
Groundbreaking is the word. It's the government moving from just, accidentally holding crypto seized from criminals
Right.
to actively managing it as a strategic asset. That's a huge policy shift.
Totally. Okay, let's unpack this. Our mission today is really to dissect how this EO creates this formal structure, moving these digital assets from just incidental holdings to, well, managed national resources.
Quite the pivot. For years, the government's held quite a bit of crypto, mostly Bitcoin, from seizures.
Yeah, we've seen those headlines.
Exactly. And the approach was pretty ad hoc. Usually sell it off quickly, get the cash.
Right, liquidate.
But this EO, especially if you look at Section 2, it lays down the law. It says the SBR and USDAS are now explicit U.S. policy. Full stop.
So they're formalizing it, putting a real structure around it.
We're basically watching the institutionalization of digital asset management happen right here.
Okay, that sets the stage perfectly. Now, if you're going to create a strategic reserve, you need a strong reason why. Section 1 seems to tackle that. Why Bitcoin? Why a Bitcoin reserve specifically and not just, a general crypto reserve?
Yeah, and the language they use in the EO is,
Yeah.
well, it's fascinating. It basically picks up arguments that people in the crypto world have been making for years.
Oh, really? Like what?
Well, it acknowledges Bitcoin is the original cryptocurrency, sure. But the real justification for giving it this special status, it comes down to two things: scarcity and security.
Okay, tell me more about that.
The order points to two specific data points. First, the capped supply, fixed forever at 21 million coins. That's it. No more can ever be made.
The mutable supply. Got it.
And second, its security record. The EO explicitly states the Bitcoin protocol has never been hacked. Now, that's a powerful statement for a government document.
Wow, okay, so scarcity and a proven security track record.
Exactly, because if something's going to be a national reserve asset, you need to be absolutely sure about its integrity and, well, that it's genuinely scarce. You can't have someone just print more of it.
And that combination, scarcity and security, leads to this analogy they use, the digital gold comparison.
That's right. And it's huge that the EO itself uses the phrase digital gold. This isn't just commentary. This is the U.S. government officially adopting that market term.
So they're classifying Bitcoin not really as money for spending, but as something else.
Precisely. As a store of value, something potentially resistant to inflation, held for the long term.
Right.
Like, well, gold.
Okay, so that's the why, but why now? Section 1 also talks about a strategic advantage, right?
Yeah, it argues that because the supply is fixed at 21 million, there's a strategic edge in being one of the first nations to formally build a reserve.
So like a race, a digital land grab almost.
You could see it that way. It implies a kind of geopolitical competition for a finite resource. If you believe this asset class is important for the future, you want to secure your share now.
Before everyone else tries to pile in, maybe.
Exactly. Before potential widespread adoption or, other countries or big institutions try to acquire large amounts, which could make it much harder or more expensive down the line.
Makes sense. And the AO points out the government already holds a lot of Bitcoin, right? From those seizures we mentioned.
Yes, it acknowledges they hold a significant amount of BTC. But crucially, it says there hasn't been a formal policy to maximize its strategic value. They've just been, dealing with it case by case.
So this EO is that formal policy. Stop selling it off, start holding it.
That's the core idea. The policy mechanism to shift from liquidation to retention, to treat it as a unique store of value.
And there's that line in there, harness, not limit, the power of digital assets for our prosperity. That sounds like a major philosophical shift.
It really is. It's recognizing Bitcoin's potential role and saying, okay, we need to be smart about this. We need to manage this strategically.
Not just reactively sell it.
Right. And that whole idea, moving from selling to holding, really explains why they needed two different buckets, two separate reserves.
Yeah.
Which I think brings us nicely to Section 3.
Yeah, perfect transition. So building on that rationale, Section 3, subsections A and B, gets into the nuts and bolts of these two reserves, the SBR and the USDAS. And this is where you really see how differently they view Bitcoin compared to everything else.
Oh, absolutely. This separation is, I'd say, the most critical, legal, and even philosophical distinction in the whole order. It draws a very clear line.
Okay, let's start with the SBR Strategic Bitcoin Reserve, Section 3A. Who runs it? Where does the Bitcoin come
All
from?
right, so it's under the Secretary of the Treasury. They're setting up a dedicated office to manage it, maintain secure custody. Standard stuff there.
Yeah.
But the source of the Bitcoin, the capitalization, that's super restrictive.
How so?
It can only come from what the EO calls government BTC, and that's defined very narrowly. It has to be Bitcoin that has been finally forfeited, meaning all the legal challenges are over from criminal or civil cases, or Bitcoin received to satisfy civil money penalties.
So, strictly from law enforcement or regulatory actions, no buying Bitcoin on the market.
Not initially, no. And no accepting it for taxes or anything like that, at least not based on this section. It's basically taking the proceeds of crime and turning them into a national strategic asset.
Wow, okay. Criminal spoils to sovereign wealth.
Pretty much. And then comes the absolute killer rule, the one that makes the SBR totally different.
Which is?
Section 3A states very clearly, Bitcoin deposited into the SBR shall not be sold.
Shall not be sold, period.
Period. Mandatory. No wiggle room in that phrasing.
Okay.
It has to be kept as a reserve asset used only to meet governmental objectives according to law.
Okay, shall not be sold. That immediately begs the question, what good is a reserve you can't sell? If you can't liquidate it in a crisis or use it to fund something, what's the point?
That's the million-dollar or maybe billion-dollar question, right? The function seems purely structural, not transactional. It's meant to be a permanent asset on the nation's balance sheet.
Like the gold in Fort Knox, is that the idea?
That's the closest analogy, I think. The value isn't in selling it off piece by piece. It's about potentially backing currency stability, providing geopolitical leverage, or just being a fundamental symbol of economic strength and trustworthiness.
So holding it is the objective, in a way.
It seems so. And it makes sense if you think about market impact. If the government constantly sold off large amounts of seized Bitcoin, it could push the price down, hurting the value of whatever they still held.
Right.
So by saying no sale, they're signaling they're in it for the long haul, treating it as permanent sovereign wealth, not just cash waiting to happen.
That's a huge signal to the market, isn't it? The U.S. government as a permanent non-selling holder. Okay, that's the SBR. Now let's contrast that super strict approach with the other entity, the USDAS, the United States Digital Asset Stockpile, in Section 3B.
Right. The USDAS, also run by Treasury, dedicated office, secure accounts, but the assets inside. Totally different story.
How so? What goes in the USDS?
It's defined as all digital assets owned by the Department of the Treasury other than BTC. So basically everything else digital that gets forfeited.
So if the DOJ seizes a bunch of Ethereum or stablecoins, or I don't know, some obscure altcoin?
Yep. Once it's finally forfeited, it goes into the USDAS, Ethereum, Ripple, Monero, NFTs, whatever digital assets they end up owning besides Bitcoin. Those are the stockpile assets.
Okay, and what are the rules for managing those assets? Still shall not be sold.
Nope. That's the key difference. The Treasury Secretary is tasked with figuring out strategies for responsible stewardship for the USDAS.
Responsible stewardship, that sounds vague, like classic government speak for, we'll figure it out.
Huh. It does have that ring, doesn't it? But compared to the SBR's rigid rule, it implies flexibility. It suggests active management.
Active management meaning selling is on the table.
Absolutely. If they're holding some really volatile altcoin, responsible stewardship might mean selling it quickly to lock in value, maybe swapping it for stable coins or even fiat currency.
To avoid big price drops.
Exactly. Or maybe using those assets for specific operational needs, short-term goals, things that are completely forbidden for the Bitcoin and the SBR.
So Bitcoin is the forever asset, the strategic reserve. Everything else is inventory. Stuff to be managed, possibly sold off or used differently.
That's exactly how it looks. The policy draws this incredibly bright line. Bitcoin gets unique, protected reserve status. Everything else is in a different category, subject to active management.
Wow. That really highlights how differently they view Bitcoin. Okay, so the framework is set up these two distinct buckets. But the government can't just wave a magic wand. They need to get the assets into those buckets, which raises the question. What do all the different government agencies have to do right now to make this happen?
Ah, yes. That takes us straight into the urgency of the next part, the mandates for transfer and accounting. Sections 3 and 4 lay out some very tight deadlines. This isn't a get-to-it-when-you-can situation.
Right, I saw that. A 30-day deadline from March 6th, 2025. That's incredibly fast for government work.
It's lightning speed. It signals this is a high priority. Within just 30 days, every single executive agency that might possibly hold forfeited digital assets.
Like DOJ, FBI, DEA, IRS.
Exactly. Treasury itself, fins to hand. All of them have to conduct a rapid legal review.
A review of what, specifically?
They need to check their existing legal authorities. Can they actually transfer the government BTC they hold to this new SBR? Can they transfer the other stockpile assets to the USDAS? Do any of their current rules or procedures get in the way?
So identifying any legal roadblocks to consolidation.
Precisely. And they can't just do the review and sit on it. They have to submit a formal report detailing the results of that review to the Secretary of the Treasury within that same 30-day window.
Wow. So it's not just policy, it's immediate operational orders. They're trying to centralize control fast.
It's the start of a massive logistical shuffle, yeah. Pulling all these scattered holdings under Treasury's new structure.
And it's not just about the authority to transfer, is it? Section 4 mentions a big accounting requirement, also within 30 days.
Yes, a comprehensive accounting. The head of each agency, again, very broad, has to give Treasury and also the President's Working Group on Digital Asset Markets a full list of all government digital assets they hold, both the Bitcoin for the SBR and all the other stuff for the USDAS.
And this isn't just like, we have X amount of Bitcoin worth Y dollars, right?
Yeah.
It needs more detail for the transfer.
Much more detail. The accounting needs to include specific technical information about how and where those assets are currently held.
Okay, like wallet addresses, custody details.
Exactly. Things needed to actually move the assets. Details about cold storage setups, any multi-sig arrangements, maybe even physical security for hardware wallets. You know, the nitty-gritty operational stuff.
Because right now, custody is probably all over the place, different agencies doing it differently.
Almost certainly. Highly decentralized, probably using different methods, different vendors.
Mhm.
This EO forces a consolidation not just of policy, but of the actual physical and digital security under Treasury.
Centralizing the risk management, too.
Definitely. And they're really trying to make sure nothing falls through the cracks. The EO even requires agencies that hold no digital assets.
Oh, really? Even if they have none?
Yep. Even those agencies have to formally report that fact, confirm they have zero government digital assets to Treasury and the working group within the 30 days.
Closing the loop, making sure there are no hidden stashes anywhere.
Exactly. It ensures Treasury gets a complete, verified inventory across the entire federal government. No excuses.
Okay, so that 30-day sprint gets the existing assets identified and lined up for transfer. But what about the future? How do these reserves grow, especially the SBR, the Bitcoin one? That brings us to the rules for asset management going forward, Section 3C and 3C.
Right. And this is where the SBR's unique status gets even more interesting, particularly the rules around acquiring more Bitcoin.
Okay, Section 3C. It says Treasury and Commerce have to develop strategies to get more government BTC. But there's a huge catch, isn't there?
A massive catch.
Yeah.
Probably the most talked about constraint in the whole order. Any strategies they develop must be budget neutral.
Budget neutral,
Meaning they cannot impose any new costs on U.S. taxpayers. They can't just get an appropriation from Congress to go buy Bitcoin on the open market.
Wait, really? They just called it a strategic asset, vital for the future, digital gold. But they won't allocate funds to buy it. That seems contradictory.
It's definitely a paradox, isn't it?
Yeah.
It signals a commitment to growing the reserve, but severely limits how. It forces them to be creative, self-sufficient, but it also caps the potential scale compared to, say, how a country might buy foreign currency reserves.
So if they can't use taxpayer money, how can they get more Bitcoin budget neutrally? What does that even look like?
Well, we have to speculate a bit, but there are possibilities.
Yeah.
One obvious one is utilizing seized infrastructure. Imagine law enforcement busts a big crypto mining operation.
Okay.
Instead of just selling off the mining rigs, the government could potentially operate them, maybe using existing federal facilities with low energy costs. The Bitcoin mine would flow directly into the SBR, essentially converting a seized asset into a stream of new BTC without spending new money.
Huh. Turning seized mining farms into government mints, basically. Interesting. Any other ways?
Another could be converting other forfeited assets. Let's say they seize a mansion or a fleet of luxury cars.
Right.
Normally, they'd sell those for dollars, and the money goes into Treasury funds. But maybe under the CEO, they could sell the mansion, take the dollars and immediately use those specific proceeds to buy Bitcoin for the SPR.
Ah, so it's still funded by forfeiture, just indirectly, converting C's value from one form to another?
Exactly. It keeps it tied to the proceeds of enforcement actions, avoiding a direct hit to the taxpayer-funded budget. Clever, but definitely restrictive.
Very clever. It makes the SBR grow based on enforcement success, not budget allocations. Now, how does that compare to acquiring the other stuff, the stockpile assets for the USDAS?
The contrast couldn't be sharper. For the non-BTC stockpile assets, acquisition is basically frozen.
Frozen.
Yeah. The EO states the U.S. government shall not acquire additional stockpile assets other than through the usual forfeiture or penalty routes unless there's further executive or legislative action.
So no mandate to figure out how to get more Ethereum or anything else, just manage what they seize.
Pretty much. Bitcoin gets the green light for creative, budget-neutral growth strategies. Everything else is basically put on hold, acquisition-wise. It reinforces that the USDAS is seen as inventory management, while the SPR is a strategic asset they actually want to accumulate.
The focus is clearly on Bitcoin accumulation, even with the budget strings attached. Okay, that covers getting assets in. What about getting them out? Section 3D talks about exceptions to the general rule against selling or disposing of these assets.
Right, because even with the shall not be sold rule for the SPR, reality intrudes. These assets often come with legal strings attached from the criminal justice system.
Makes sense. You can't just declare seized property a strategic reserve if a court says it belongs to someone else.
Exactly. So the MBO carves out 4 specific necessary exceptions where these assets, even the SBR's Bitcoin, can be released or sold. The first one is fundamental.
Which is?
Returning assets to identifiable and verifiable victims of crime. If someone proves the seized Bitcoin was stolen from them in a hack or scam, the government has to give it back. Justice comes before the reserve.
Okay, that's straightforward. What are the others?
The second and third relate directly to law enforcement activities. Second, assets can be used for law enforcement operations.
Like undercover stings, paying informants in crypto.
Could be. Things necessary for ongoing investigations where crypto might be involved. It acknowledges the reality of how crime works now. Third, assets can be equitably shared with state and local law enforcement partners.
Ah, the asset forfeiture sharing program.
Exactly. Federal agencies often work with state or local police on big cases. If they seize assets jointly, federal law usually requires sharing the proceeds. This EO ensures that can continue, even with digital assets going into these new reserves. Keeps the cooperation going.
Right, don't want to disrupt those partnerships. And the fourth exception sounds pretty technical, linking to specific laws.
Yeah, it's about ensuring the reserves comply with the existing legal framework for managing forfeited assets. It allows release to satisfy requirements under specific statutory codes, like 31 U.S.C. 9705, 28 U.S.C. 524C, 18 U.S.C. 981, and 21 U.S.C. 81.
Okay, what do those codes cover, basically?
Well, 28 U.S.C. 524C is a big one. It governs the Department of Justice's Assets Forfeiture Fund. This fund pays for managing seized assets, disposal costs, victim payments, and those equitable sharing payments we just mentioned.
I see.
So this exception means if Bitcoin from the SBR, for instance, is legally needed to meet the obligations of that fund, maybe to cover costs related to its own seizure or to make a legally required sharing payment, it can be used or sold for that purpose.
So the no-sale rule for the SBR holds unless it's needed for victim restitution, specific law enforcement ops, sharing with partners, or fulfilling the statutory demands of the existing asset forfeiture system.
You got it. It integrates the new reserve policy with the old established legal machinery. Only the Bitcoin that clears all those hurdles gets locked away permanently in the SBR.
It's a careful balancing act. Okay, so we've got the structure, the initial funding rush, the rules for future growth and disposal. What are the final steps to actually make all this work long term? That seems to be segment 4, covering sections 3 and 5. There's another deadline in there, right? 60 days.
Yes, another tight turnaround. This 60-day deadline points to the deeper work needed beyond just setting up the accounts. It shows they know this EO is just the start, and the real operational complexity needs more study.
So within 60 days of the order, Treasury has to deliver a big evaluation.
A very comprehensive evaluation, yeah. It has 3 main parts.
Okay, what's the first part cover?
First, it needs to assess the legal and investment considerations for actually managing the SBR and USDS going forward. Think about risk management, counterparty risk with custodians, insurance, legal liabilities of holding potentially controversial assets. They basically need to write the whole operational playbook.
Okay, the how-to guide for running a sovereign crypto fund. What's the second part?
Second is very technical, identifying the specific physical and digital accounts where the SBR and USDS should actually live.
So choosing the vaults, essentially.
Exactly. Deciding on the best, most secure cold storage solutions. Are we talking ultra-secure government bunkers? Geographically dispersed locations? What kind of multi-signature controls? How do they protect against state-level hacking attempts or even physical threats? This is the planning for the digital Fort Knox.
High-stakes stuff. And the third part of the evaluation, something about legislation.
Yes, and this is really telling. Treasury has to assess the need for any legislation. They need to tell Congress if any new laws are required to fully operationalize the order or manage these accounts properly over the long term.
So the White House is basically saying, we've started this with an EO, but we might need Congress to make it permanent or fix legal gaps.
Precisely. They recognize an executive order can be changed by the next administration. If they want this to be truly enduring policy, they might need Congress to pass specific laws.
Laws about what, potentially?
Maybe clarifying rules for using reserve assets in emergencies, or formally authorizing the budget-neutral acquisition strategy, or setting up stronger legal protections for the reserve accounts. It's anticipating future challenges and trying to build a more durable foundation than just an EO alone.
Proactive.
Ah,
Trying to hardwire it into the system.
yeah.
Okay, and finally, Section 5 has the usual legal boilerplate for EOs, right?
Yeah, the standard but important stuff. It clarifies the order doesn't override any existing legal authority of other agencies. Critically, it says implementation has to be consistent with applicable law and subject to the availability of appropriations.
Ah, that appropriations language again reinforces why that budget-neutral constraint for buying Bitcoin was probably necessary.
Absolutely. It ties it back to the reality of federal funding. And one last key point in Section 5.
Which is?
It states the order is not intended to create any enforceable right or benefit for any outside party against the U.S. government, meaning you or I or some crypto company can't sue the government based on how they manage the SBR or USDAS, arguing the EO gives us some right. It keeps the management of these assets firmly within the government's own discretion, protects their strategic autonomy.
Got it. Keeps lawsuits at bay. Okay, wow. We've covered a lot of ground there. Let's try to bring this home for you, the listener. What are the absolute core takeaways from this EO?
I think the number one thing is that stark difference between the two reserves. SBR, Bitcoin only, locked down, shall not be sold, meant for permanent strategic holding, with growth tied to budget-neutral, likely enforcement-linked methods.
Right.
Then the USDAS, everything else digital, managed flexibly under responsible stewardship, meaning selling or converting is possible, but future acquisition is basically halted without new laws.
And the source of funding, initially at least, is huge.
Absolutely critical. Both reserves start purely from assets forfeited through criminal and civil enforcement. No taxpayer money spent up front to buy these assets on the market.
They're spinning law enforcement proceeds into strategic national wealth.
That's a great way to put it. Leveraging enforcement power to build these reserves.
So the big picture implication, what does this all mean? It feels like the U.S. government has officially picked a winner, at least in terms of strategic importance. Bitcoin is now formally treated as a unique, non-liquidating reserve asset, separate from everything else.
It's the government adopting the digital gold narrative as actual policy, yes, classifying it fundamentally differently.
Which leads to a really fascinating final thought, doesn't it? Based on that shall not be sold rule for the SBR.
Exactly. The AO says the SBR must be used to meet governmental objectives. But if you can't sell a Bitcoin, what objectives can a non-liquid asset possibly fulfill? It forces you to think beyond just money.
Beyond transaction.
Way beyond. Could a massive permanent Bitcoin reserve act as collateral, maybe to backstop a future U.S. central bank digital currency, giving it stability?
Interesting.
Or could it be used geopolitically? Maybe not by sending the Bitcoin itself, but by using the reserve to guarantee digital contracts and international deals, or as a secure anchor for aid agreements, all without the BTC ever leaving Treasury's control.
So using its existence as leverage, as a foundation of trust.
Potentially. It reframes Bitcoin not just as an investment, but as potential foundational infrastructure for the future digital economy, held by the state. It's a much bigger idea than just stacking sats.
A much bigger, more strategic game. Definitely something for all of us to think about as this policy unfolds. What are those governmental objectives going to be?
Time will tell. But this ENO sets the stage for some potentially radical shifts.
Indeed, it does. Well, that's all the time we have for this deep dive into Executive Order 14233. Fascinating stuff.
Truly historic in its own way.
Thanks for walking us through it, and thank you for joining us. We'll see you next time on The Deep Dive.